Thanks for joining us for Trading Buddies on this Monday, the 19th of June. I must say I'm a little bit disoriented given my week off yesterday. My week off, make that last week. Told you I was a bit disoriented. And it was very, very frustrating, I could tell you, without any technical... G'day, Lewis, how are you, mate? Without any technical assistance from Zoom. I was having a terrible time, I've got to tell you. And with one laptop and precious little else, I was feeling very alone trying to get on to anything. Anyway, back home, I'm pleased to say, and very much looking forward to getting some money in the bank to pay for my last 9 or 10 days extreme activities on the mainland of Australia. Anyway, that's enough about my little trip. Excellent, Lewis. Good on you, mate. Let's get into it, shall we? I, of course, was not trading gold last week due to a number of things, but mostly lack of good internet wherever I was. Let's see how it went. I need to get that thing off there. There we go. Expert advisors removed. Now we're talking. I've got an order placed on gold, mind you, long. Not that confident that it will go long, but I'm reasonably confident that it may, if it breaks this level here, may get to here or even here before it resumes its downward spiral. Is it going to have a downward spiral? I don't know about that. But that's what I think. I think it's certainly potentially going to retrace. And for that reason, not alone, because I do have a slingshot candle scenario here. It's a setup that I do like. Bit of a warning here as well, that if price came back to here, it would seek new highs. Same here. And for a fourth or even fifth time, I do have a setup here that suggests that if price goes to here, it's going to go to here or here before it stops. So that's the plan, trading this bar only. So Friday's candle, entry above, stop loss below, first take profit right there, which is around about the 1-to-1 mark. I will close half at that point. Won't move my stop to entry because we've got this trade line protecting the stop underneath here. So that's probably what I will do if we're fortunate enough to get there. Am I committed to the upside of gold? Not at all. And the reason for that should be very, very clear. This double top here is dominant, absolutely dominant. And if you want to go a little bit wider still, then we've got 3 of the beasts sitting right there. So that does not speak to me of price going long at this point. So this is only a very, very short-term trade. I'm looking for a lower high in here somewhere so I can actually get stuck into this short. But I do recognise, of course, that there are plenty of gold buyers sitting on the sideline just waiting to jump in here. So we shall see. It's a tricky scenario, but the chart's telling me one thing and one thing only, that there has to be no such thing in trading at all. It's telling me that there should be some downside, maybe even down to this level here. I'm sure we'll talk about that later in the show. Anyway, for now, the hourly chart is sitting pretty much even in terms of a range, which is clear. We'll be using this candle as the beginning of our range, which means the high of that range is here. The low of that range is here at present. Right on my stop loss for the long, which of course hasn't triggered. Risk to reward is absolutely shocking yet again, because we're trading straight into an untested daily pivot, straight into an untested weekly pivot. And I said that last week at some stage, not last week, it wasn't here, but the week before. I think I said exactly that. And it just went ape shit. Might have been there, actually. No, I think it got above the daily pivot. Can't remember where it was. Have a look at it later anyway. As I will, as to how last week went, because I wasn't trading. It looks as though that one would have been good. That one would have been good. Friday, no good. Thursday, Wednesday, okay. Tuesday, ooh, would have been difficult. And Monday, that's Tuesday, that's Monday. That would have been difficult as well. So unless you took profit here on this one, it was probably even Stevens, two up, two down. I'm less inclined to trade that than anything. A couple of reasons. One is the pivots have got this entrapped, if you like, or encapsulated within their grasp. And the other is that it is a US bank holiday. So I'm not expecting there's going to be anything too fiery going on. As I said, this can always happen, but I'm staying out of this, not going to trade it. Okay. I have, as I said, that very short-term long bias on this. And if you just come into the room, I'm trading gold long above this bar here. So Friday's daily bar, entry above, stop loss below. Righto. And then I'll probably look to get short if I see a lower high. As far as the week is concerned and my interest in anything, gold is it, I've got to say. It's the only thing that I can see that suits my eye at this point. Updates. We traded Aussie Swiss the week I went away, or the week before I went away, and we traded it short, I think, on this bar. Yep. And I did in the Telegram group suggest that it was time to get out of this before the Aussie news. And had you done that, you would have survived. Had you not done that, you would not have survived and would have lost your 0.25% risk on that one. CAD Swiss, we were trailing for the longest time. I think 4.5, maybe 5 weeks in this trade we were. There we entered, right? 1, 2, 3, 4, 4.5, nearly 5 weeks, yeah, into that trade. And we got out of it last week with the trailing stop. Was it last week or the week before? Again, I can't remember. Sorry, my memory is just completely RS at the moment. Having had that week off, I'm just completely disorientated. So I think that was a pretty good trade at the end of the day. And I'm looking for this to come back before I look for another entry. It's pretty clear right now that price does not want to get above that 60 or 0.68 handle. Yet these two, which form a tweezer top of a kind, certainly a double top there on the weekly chart and the daily, are really inconclusive in my mind. We've just gone straight into consolidation rather than bouncing completely off that level. So it's indecisive here. For that reason, I'm indecisive, and I would like to see price come down a little bit and maybe give us a false, or maybe just retest this breakout area. But I do have another slingshot scenario here suggesting if price goes to here, it may go to here. Yet there is a problem, and the problem is that level there. So that's potentially the bounce and pick up the trend point, in my humble opinion. So therefore, I find it very, very difficult to trade it short, although I do have a candle scenario there that suggests it is possible. So I'm just going to let that one go for now, CAD Swissy. Hopefully Ash can pick me up on what currencies are in vogue this week and which aren't, because I've got no bloody idea, frankly. I looked at the... Go ahead, mate.
Hey, buddy. Yeah, very well. How are you?
Oh, look, I'd like to say I'm refreshed from the week away, but that's simply not the case.
Yeah, horrible, that, isn't it?
Yeah,
You need to be refreshed when you come back.
Yeah, four flights in 6 days or something, just crazy.
Oh,
I was all over the countryside.
Yeah.
Sorry?
There's a book in there somewhere, I'm sure. 4 flights in 6 days, maybe a song, I don't know.
It may be a song, but we've got to be very careful with their songs, as you know.
Yeah. Didn't Crowded House write a song called 4 Flights in 6 Days?
Ooh, no.
Something to have,
something to that effect. I know the one you're talking about.
Yeah.
Seasons? Was it seasons?
Yeah,
4 seasons in one day. There you go.
I think they should have done 4 fights in 6 days.
Well, maybe. I don't know. Maybe that's where they got it from. How was the week anyway, mate?
Yeah, interesting, mate. Interesting. Lots of dynamics actually in the market kind of going on. We can get to some of the drivers. I mean, I can talk firstly. In fact, let's talk about the charts first, and then we'll think about some of the drivers and some of the things that are going on.
Awesome.
I think some really, yeah. Go on.
No, yes.
Oh, yes.
Awesome.
Yeah.
Awesome's just a bigger word for yes. That's all.
Okay, so the interesting thing really, you know, when you kind of look at the dollar, which is really, most things are a dollar story at this stage, because Jerome Powell supposedly did a hawkish pause, and I think it kind of was. I concur with the theory, you know, behind what he's saying. But there's another kind of side of it, that if you think that you haven't done the job yet, then why would you pause? But then there's the other side of it that suggests that, you know, that there are sort of, you do need to allow some of the things to filter through to see what move should be next. So actually waiting, I buy into it. Now, if you look at you know what's really been going on, the weekly chart is the really interesting one, I think, as we start the week. And if we look at some of these moves, Aussie dollar to start with, we've seen this push right into the near enough, you know, because it might even be a little bit, it might be that level there, which suggests that we might well be at some significant resistance with the Aussie dollar. The pound has broken out against the dollar. Now it's the pound that I'm going to focus on the most as we go into the week. Pound broke out of from the US dollar, and I'll be expecting retracement. So I am expecting downside with the pound this week. And there's a really interesting dynamic when we're looking at seasonals with the pound. The dollar CAD looks like it's got some further downside when you kind of run the longer term trend line along there, and probably this horizontal level would meet somewhere around here in July for another push down, but it has had a decent push down, so it might even retrace a little bit. Dollar Swissy as well. Another one that you know, it's reached this level of resistance, of support, but the Swissy actually looks pretty good for some further upside, and it does depend, I think, on how people are viewing the current situation with the global economy. Because if they see the global economy as weak and weakening, then there's no reason to suggest that the Swissy wouldn't be a currency which is supported. Now, I like the Swissy, particularly against the pound. And if you look at the pound's
because the pound's been overbought.
Well, yeah, there are a few things, a few reasons that I like it. But one of the things about the pound is that if you look at the seasonal patterns in the pound, this period is incredibly weak. I think over a 10-year period, it might have been it would have returned 40% to the downside, which is huge. However, when you unpack some of that information and you realize that it was now in 2016 that the Brexit vote was decided, then you recognize that there is that anomaly in 2016 where the pound just tanked. So if you look over 10 years and think about returns over 10 years, you're not really getting the full picture. You know, you're getting the picture of one particular period which drags the average right the way down. In saying that, the pound does tend to be weak at this time of year anyway. Not 40% weak, but it does tend to be weak at this time of year anyway. And the Swissy tends to be pretty good. Now, the question is, how can you trade the pound when there is an interest rate decision due, which is obviously kind of on Wednesday, I believe, or Thursday. So if we look at the data for the week, where I think the UK information becomes interesting, that Rightmove house price index was not as negative as I thought it would be, actually. 0% growth, but I thought that'd be going into negative. That wasn't as negative. But if
Actually,
we look,
just completely off topic,
yeah.
but I did notice it there, and I noticed it when I had a look at Forex Factory. What on earth is Juneteenth? Any idea?
Oh, I haven't got a clue what it refers to. It's just a holiday, isn't it? But yeah, I'm not sure. I'm not sure. Is it the first teen day in? No, it's not the first teen day. Oh, yeah, it is the
No.
first teen day. First teen day of the month. But I don't know why they
Wow.
celebrate it. Yeah.
No. Well, June. They on holidays yet? Not yet.
First teen Monday. Sorry, the first teen Monday of the month. Are they on holiday? Yeah, yeah. The states are on holiday. Yeah. Yeah.
There you go.
But I don't know why. I mean, I don't know whether maybe they have some sort of school break or something. But yeah, they've got their break going on.
Well, they have 6 months off or some bloody thing, don't they?
They have a lot of time off, man. There's always somebody on holiday. I mean, if we did your 4 journeys in 6 days, I reckon we could be on holiday for every single one of them in the right country. So yeah, we got Juneteenth, which you know that does kind of suggest that the market is going to be relatively quiet today. Anyway, nothing, you know, regardless of that, apart from Lane speaking later on, there's not really a whole bunch of data which is going to move the pin that much. Maybe some of the CAD inflation data, but it's really when we get into more so Wednesday. I mean, Tuesday we see some building permits, which and the housing numbers, which have been, you know, have been showing some risk in the US. You know, that is kind of indicative of what's going on in the US. And FOMC member William speaking, maybe he suggests something about, you know, more interest rate hikes, because the market has basically taken a bet that the Fed is done. And even with last week's pause, which was priced in, and then the hawkish statement, the market held up pretty well. You know, the dollar sold off and it held up pretty well. So they don't believe Jerome Powell. That's what's being stated. But back to the pound, this is where it starts to get interesting. Wednesday, these are the numbers that I think are more likely to shift the market than the rate decision, because I think everybody's expecting a 25 basis point rate hike anyway. So that's probably baked into the pie. But this is not. So if this starts to drift lower than the 6.8%, you know, let's say we see it down at 6 or down at below 6, then the pound has got a decent chance to weaken. Same with PPI input as well. So this inflation data is probably going to be the driver for the pound this week, which means we can wait for it. Or if there is a setup, we can take a position and then see if the data helps us out. Because by the time we get here for the rate decision, as I say, the forecast is already 4.75. But by the time we get there, if that inflation data has dipped enough, you know, it can't just dip a little bit.
Yeah,
there might be an assumption that they could also be the next to pause. You know, they're pushing closer to the 5% mark. The 6% mark appears to be the real danger zone. That's what people don't want. If the alternative happens and the CPI data continues to push higher, then the pound is likely to get another decent week. You know, and this is where the seasonal aspect will come into play, but only if. You know, you couldn't trade the weakness of the pound this period, and it's not a great currency for the next week or the next month, but you couldn't trade it for this particular period unless there is evidence that the Bank of England are about to pause, because the Fed have paused. The others went again, but they might be also assumed to pause. But the UK has got the worst inflation throughout the G7, so it's this country that needs to see that particular metric start to dive under the 5% mark, because the real interest rate at 4.75% with inflation up at 6%, or sorry, near 7%, then the real rate is kind of negative 3.75%. Sorry, negative 3.25%. So it's got to come back into line with the real interest rate. Sorry, with the interest rate. So anything near 5, that's starting to look really healthy. You know, you got an interest rate at 4.25, you got inflation at 5. then there's a real interest rate of negative 25 basis points, which is healthy. That's okay.
Yeah.
So we need to see this dip. We need to see this dip, and we need to see it dip probably under 6 to really get the pound selling off. But I think anything under 6.5, and there might be a few questions to be asked about the pace of the interest rate hikes. We also have an interest rate from the Swissy, from the Swiss National Bank. And as I said, global contraction would push us towards some of these safe haven currencies, i.e. the Swissy. So if we were looking at the chart and saying, okay, well, what do we need to see then on the chart to say we've got a trade? And at this point, now we discussed this last Thursday, I think it was. I was talking to Catherine about the euro, and it was really before the data was released, and when we were sort of saying about the fact that trading before the news is actually quite sensible. Because the risk for the dollar was up. The risk for this was up, and that it worked out. I'm not saying that it was a great call because it was a 50-50. It could have been gone the other way. We don't know what the data was, but the risk was always going to be to the upside, and the risk to reward was very good because even if you have stops down at this point, then the initial kind of aim was here, which was a 1-to-1, but that just burst through after the data. And if you trade on data, then you'd be holding right the way through, and you'd probably be looking to either take profit or probably move your stops under this particular point here now, even with the data that we have available, because there could be a little bit of jostling but on the position, and it may well retrace right the way back down to this weekly pivot. So coming out around here, you're going to get another price point lower to get in. So trading before the news is fine. So if you get the setup, that is. So if we look at the pound, and I like the pound Swissy, but I also like the pound Kiwi. Now I know we've seen that New Zealand have gone into recession, but I also like the pound Kiwi. So if we start with the pound Swissy, this is going to need to start breaking these levels here for me to get interested. This is a 4-hour now. This is where we are on the 4-hour. It's got to break down the weekly pivot. It's got to break down the trend line, and ultimately break down these lows here, which are effectively going to hold it up. Now, if you look at this on the weekly, this suggests that we may well be at a point of resistance. We might be through it, no question, but it hasn't gone through with any real velocity for me to be too concerned about the fact that it's just going to take off here. There's a trend line down here, and if that trend line is to have any kind of use, that would suggest a potential retracement into here. So now, if I'm looking at this and I've got my possible target, where have you gone? Oh, here. That's the potential target there, and we look through this chart again on the 4-hourly. It would need to break all of this down. And if that's the case, you may well even get a slingshot, mate. If that's the case, it's going to come under the trend line and back and retest this trend line to break in the weekly pivot, the daily pivot, and everything else. So
on the back of 3 amigos too.
Yeah, you like that, right? Yeah. So yeah, we've got this. So what I've got right now is a possibility of what could happen, and if the possibility plays out, there's 3 amigos. If this possibility plays out, then the price has to do what I need it to do before I'll be getting interested. So
it's got a bit of work to do, hasn't it? Yeah,
it's got some work to do. Break down there, and obviously, if you get your test up here, you're going to be interested under this bar, right?
Yep, sure am.
Yes. So so this will be kind of data dependent. Now, of course, if this does happen, this 3 amigos, the first 2 amigos, then start to look like a left shoulder with a potential sort of, there's lots of things that could happen here that could give us a really good, there would be the neckline there, would be really good for our technical setup, and it just means that we can wait. The pound is weak during this period. Of course, Brexit is the anomaly. The inflation data may well weaken, and actually, if the price is up here all the way through, before Wednesday, we can wait for that inflation data to be released. If the price comes down and test this area before the inflation data, we can take a trade to the downside and look to see whether we can take advantage. But the chances are, looking at this, much greater likelihood that we get Wednesday. We get through Wednesday before we need to make a decision. It might even be that the push to the upside actually is a little bit higher, and it actually gives us a proper head and shoulders where it continues up there, and then we get this is a right shoulder, and then we start to come down. Now, if you measure,
well, that interest rate announcement could do all that hard work for us, couldn't it, to get through those pivots through the trend line?
Absolutely, and do you know what? It will be, as you say, it will be the announcement rather than the actual interest rate itself. It'll be the press conference. Now, from the left shoulder to the head is 20 bars. From the right shoulder to from the head to the right shoulder is 20 bars, which leaves us on the 22nd. It's now the 19th, so that's Thursday. That's Thursday. We could be getting that head and shoulders pattern, and then it be stops at the highs, and that is going to fall fast if traders decide that they don't like what's being said. So I'm liking the look of this one. This is the one I've got my eye on. That doesn't mean I want to trade it today, far from it. But it is the one that I'd like to keep my eye on this week. I did mention the pound Kiwi, yeah. So the pound Kiwi is the other one, and the pound Kiwi is almost a counter argument because the Kiwi obviously is associated with growth. So Swissy associated with contraction. This one associated with growth. So with the situation as it is, I would prefer the Swissy. I'm much more kind of edged towards the Swissy, maybe even the dollar, as a safe haven, but really the Swissy. Now, if you look at this, starting with the same kind of process, what we've got with the pound Kiwi is it looks like we got this pattern going on here, which again, it looks like we may well be at a resistance point, and then kind of coming down to the 4 hour. This is, it's got some work to do to kind of tidy itself up. The range is here, which is not great. It's, it leads us under that monthly pivot. I mean, in saying that, if you're looking at this on a weekly, just to get under this period, this area here, then we've got some room. But it does mean that this whole range it would lack a bit of it would lack a bit of interest for me. Because it could mess around here for ages. We could take this low out, come down, and pop back up again. So I'd be much more comfortable if it took this area out here, and then we get something that looks like some sort of maybe some channel, and maybe there's a downward channel kind of going on here, which is problematic actually, because then you need to break there. But you look at this on a weekly, it's starting to look like, well, maybe a bull flag, but I think we're stretching the friendship a bit there.
There is a little bit of mixture there, though, isn't there? I mean, I like your expanding or broadening pattern on the 4 hour chart, wasn't it? That looks good. And as you say, that's probably getting a little bit long in the tooth for a flag.
Yeah, I mean, here would be okay.
And you're at the top of it. Yeah, perfect.
The one way to trade this now would be to go down to these shorter term timeframes and see what we got. Now look at this. We potentially could be just about to form a lower high on the hourly. Now this is a greater risk in as much that it's not very likely to work out. But if it does work out, the reward would be huge because you've got seven looks like, is it 70 to the upside or no, it's 7 pips, 89s. Oh no, 70 to the upside. 70 to the upside, and I mean you got a 3-to-1 just against the bottom of the actual pattern. And the question that would be asked at this point is, why would the pound take off out of this pattern before the interest rate? Unlikely. So I think that there is a fair trade. The issue is that this is the first time that this is kind of touched here, and it's not a confirmed level. The level might well be more like that. It doesn't look as clean when you look at these lows. So this looks a lot tidier as a potential pattern here. But that's what you're kind of speculating on, that this is the pattern. stops at the highs, and you're aiming all the way down here for a 3-to-1. So that may well work out. Not ideal, I've got to say, because of
I think the confirmed structure is there. If you draw a line from the first or the second lower high after the ultimate high, which is no, come right back. It's after the first move.
This here.
No. Where it's come off. So the extreme high, there's a lower high than it. Yep. Next one down.
This one. Yeah.
Yeah. Next one down.
This one.
Yeah. So if you draw a line across, and I think you had it in the first place.
No, I didn't actually, mate. I like that though.
That'll do, but the actual structure I see is a broadening pattern.
Got it. And we got that. And we got that.
Yep.
Yeah.
So
which also leads us down here, doesn't it?
Yep. It also gives you a false break of the horizontal level, which was the first. There's a little double lower high in there after the reversal, which is the second test of that. Yeah, in there.
Yeah.
So if that level, that horizontal level across there, if we were to get a retest of that now after your bear bar, I think that would be cool.
Yeah, I agree. You know, I would like this bar's low to be the horizontal level, so that would there, which still holds. I mean, it holds really nicely actually. You look over here. So that bar's low. Take the bar out, maybe even test the daily pivot, come back and form a reversal in here. Then you've got something to go on.
I like it.
Yeah, I think if we look at that on a 15, is that a 15? I can't see anything anymore. There we go. It's a 15. 15 is a you know, well, the 15's got this head and shoulders going on as well. It's got a you know, it's attempting to give us a neckline break, and this is going to suggest this gap before the retracement. So not getting to the week. I mean, that would be a lot better if it came down to this point here at 2.05680. It comes down there and bounces. That's still going to suggest that the daily pivot is in play. I wouldn't want to move stops by any stretch, but you know, if it did come down here, you could probably do some management on this to make it safer. Maybe even moving down to these highs here, or trailing down a 15-minute trend until you are at break even, and then just letting it go. I think there's a few ways that could be managed.
Yep, and then if the news goes your way, it's a potential great trade.
Oh, I mean, if the news went the way after that, then I think minimum you're looking probably to test this trend line here. No, which would bring it down to these lows here. So there is a possibility of having a. Oof. I mean, you'd be getting at least an 8-to-1. An 8-to-1 trade on that particular point. Now you'd only have to risk 0.25% to make a 2-to-1 trade. And you know, that might not sound that attractive to people, but it really is about protection more than it is about kind of making the money.
Very attractive to me.
Yeah, that would be pretty attractive to me as well, mate. I mean, when you think that you are probably going to get a conclusion on this within the next 3 or 4 days. If you forget the chart and somebody said to you, you know, you've got a chance of making 2% in a week, I think most people would take that. You know, regardless of the fact that, you know, if they didn't say, but you could make 8%. If you didn't hear that bit and you just sort of said you could make 2% in a week, I think most people would say that on. I mean, even if you were risking 0.5%, you still got 4% potentially on offer there for 0.5% risk. So I like the look of that. I think the risk to reward is there. Yes, you need lots of things in your favor, which is why you are much more likely to get run over. and it's much less likely to work out. But is it worth 0.25%? Well, could well be, mate. Of course, the other problem really with this one is to do with the Kiwi. I prefer the narrative to do with the Swissy, but this is to do with New Zealand as well. And New Zealand's, I think that they reported they've gone into recession from memory.
If you were to ask the Kiwi people in our little group, were they surprised at that? Don't think you'd get one.
No, I think you're right. And this is the global round, and this is the problem really for the Kiwi. I'll tell you what might move this. Interestingly, is nothing related. You know, where we wouldn't be looking for any kind of relationship between the Kiwi or the pound, and that's in this number here. Whoops.
I think when the pound used to be one of my favourite trades, but it kind of got lost its way. For me,
well,
anyway.
It might be back, mate. Might be back.
Might be back.
Worthwhile.
All right. I'll start following it then. I'll just open
this is the one. This is the one to look out for. The PBOC loan rate. I think, you know, that there's stuff going on in China right now, and if they do add some stimulus, that may well kind of provide the Aussie and the Kiwi with just some kind of incident, you know, some connected upside. So there's a few things that could move it. Difficult to know what it's going to be. Actually, I think there's a few things out there which could actually kind of move this market, which is why when we look at the charts, we know where there could be some things in our favor, and we know where there couldn't be. And when people ask me about trading the news, you know, the people say about, I had someone on the weekend saying, yeah, and you need to avoid the news events. It's like, well, you're always trading the news events, whether you like it or not. You're trading the news events. The question is, are you comfortable with timing your trade just before the news event, or, you know, because by the time it's reported, it's too late. And the truth is, as long as you've got your risk to reward in place, trading the news is a great way to do it. You just need to kind of understand what the probabilities are. And actually, if you look at the euro, before the news release was put out to the market around here, my argument with this stuff is that you've got a really strong trend. The technical thing that was going on here was really strong. You know, we were around a monthly pivot. And if the news goes against you, let's say that the jobs data came out and it was really strong, and the ECB came out and they didn't raise interest rates, all that stuff. If the news goes against you, because the momentum is to the upside, you may well have more time to close your position, because people haven't got a whole stack of orders because they're expecting this to go. You know, the trend is up, so they're really sort of the momentum's this way. Which is why, you know, when you look at charts,
if you haven't got your chart, mate.
Oh, sorry, mate.
It's okay. And, you know, another interesting way to use those data or news releases, and I like it, and I saw a couple there. We'll go back to it when you finish.
Oh, well, I was just going to say that, you know, the trade was in here. That was the opportunity for the euro dollar, and the trend was up. So not only are you, yes, you're speculating on a news release, however, you are with the crowd. You're with what everybody's doing. So if that news comes out and it's against your prediction, effectively, you're against your trade, you've got a pretty good chance, not definitely, but you've got a pretty good chance of this just messing around first before it goes like that, which gives you a chance to get out before your stop is hit. You know, because so many orders are sort of stacked in that way.
Give you a good back testing exercise.
Yeah.
And I mean manually, because I don't know how computer back testing works.
Yeah.
Well, I do, but, you know, if you were to look at, just pick one currency, if you like, the dollar, the pound, whatever, and go back and have a look at every major announcement, or every red announcement, if you like, high impact news. Just go back a month, 2 months, whatever the case may be, and see what difference that impact or the result of that news made on that currency. Even against one, it doesn't matter. But if you use it maybe currency strength versus the dollar would be a good way to look at it. I think you'll find, but I could be wrong, and it's different for different currencies, that the news generally will give you a reaction, right? But I think the day after or the hour after or the week after or whatever the case may be, wherever the trend was, if it was a reasonably strong trend, you're going to go with trend at the end of the day.
Mm.
Something major has to happen for a trend to reverse on news.
Yeah, very true. And actually, you know, you're absolutely right, mate. And I've done that study. And the study that I've actually sort of seen is that certain things are much more likely to give you an opportunity to get in the trend than others.
Yep.
You know, there are certain new data points which, like if the jobs data had come out strong from the US, then I think this probably would have reversed trend. Depending on what happened with the ECB, I suppose, but there was enough there to say that those two are significant. Let's say it was retail sales, however, unlikely. You know, it wouldn't have mattered that much how well those retail sales numbers come out. It wouldn't matter how much the University of Michigan numbers were promoting the dollar, because they are, particularly University of Michigan, they are news events that will be leading indicators. But you get the consequential ones, which are going to be things like jobs numbers, and they're less likely. Sorry, they're more likely that because that by that time that's the real data point. You know, it's not the leading indicators. The leading indicators probably won't move it, probably won't change it that much at that particular period.
Yeah.
But when the consequential ones come out, they're the ones that really can change the dynamic.
Two things I want to point out right now, not on euro dollar. So when you finish with that, let me.
Yeah, I'm all done, mate. All done.
Okay, if you can go back to that data release chart or calendar, if you like. Here's another idea for you guys. And it's all about the disparity between the previous and the forecast. So if you look at, on that chart, let's say the PPI on the CAD at 13:30 today. Is that today? Assume it's today.
Yeah.
Where the previous number was negative 0.2%. And the forecast number is 1.4%. That's a fair disparity or change, if you like. What I would be thinking, the potential for the CAD to rally prior to the news on the back of that number is somewhat interesting. Now, it may be that the market's already done that. But if you can see that number, or, you know, and monitoring that number at the beginning of the week, I think is a great idea. And if you looked at, if you go down to the yen now at 5:30, whenever that is, that today?
Yeah.
You can see another disparity. Tomorrow, better still, because you've got 1.1 previous and you've got a negative number forecast. Now, to my mind, that's negative for the yen, right?
Yeah.
So I think that's a really good way to pick up a bias for the week, just at the beginning of the week, right? Because those numbers don't come out generally the week before.
No.
But if you see a massive disparity between the previous and the forecast, I think there's every opportunity to trade in that vein or in that direction. So I think you can use
the
that
problem
chart.
with that, mate? I totally get that. But the issue with it is that they are wrong so often. I wonder whether investors
the forecast.
The forecast terrible.
Yes, but the people who are trading the market will take notice of those numbers, regardless of whether they're right or wrong. You know.
Yeah. What is probably where these forecasts could be quite useful is if the investor has done enough research to suggest that actually that's not the number I've come up with, you know. So these guys are wrong. So if the yen does sell off a little bit, I want to get in because my belief is that the industrial production is going to go up to 1.2%. So that's where another way that these things can be used. because obviously, you know, with the forecasters, I don't know the work they do, but this is the problem with these guys. I don't know the work they're doing. Are they talking to businesses, and you know, how are they deriving these forecasts? Who are these people? Are they just people that work for investing.com that are just sort of like, yeah, just plonk that one up, that'll do? What kind of metrics are they coming up with to kind of like, you know, actually give us that forecast?
That's a superb point, and I think I've told you this story 100 times, but maybe the people in the room haven't heard it. There are people, and I know one who was offered $1,000 a week to give a stock forecast every Monday morning. Could be one stock, could be a sector, could be anything. And he said, "What if I haven't got anything?" He said, "Doesn't matter, just throw anything up there." Hello.
Yeah.
So, you know, these are the things that are needed to be avoided, of course. And how you work that out, I don't know. But it would be a reasonable idea to find out who is posting those numbers on each particular website. Yes, I agree with you 100%.
Yeah. Now, the final thing that we should, you know, talk about is
on this.
Sorry, mate.
No, I want you to go back to the pound Kiwi chart and go to the monthly.
Okay.
Because I want to support your case for a shorting. Because I've just opened the chart because, you know, I like this pair.
Oh, I tell you what, there's two other charts we need to look at, actually, but we'll get to those in a minute. Pound Kiwi on the monthly. Here we go.
Yep, pound Kiwi on the monthly. If you were just zoom in a bit. Beautiful. So there's a low on your chart around about September, maybe December 18.
Yep.
There, come up that low directly above you. Yep.
Yep.
So if you were to join the low of that candle and trend line across to all the lows, yep, through there. And you've already got it. That is a channel. So if you bring the top of that channel back to the high on September 17th, by the look, 2017, by the look of it.
2017.
Yep, that high there. You can see a massive false break, of course, but everything else is topped out there.
Yeah.
And you can even throw a horizontal line across where price is at the moment. And I think you've got a very good confluence area there as well.
Yeah, that looks really good, mate.
Maybe, yeah, it's in there somewhere, right? Yep.
Yeah,
yep.
You use those closing prices. You're absolutely right. It does look like it's in there somewhere. Might be
if you go a bit wider now, you'll see if we've got anything to the left of that for context. Look at that. Beautiful.
Yeah, decent case to be made, isn't there? Yeah, I mean, this is the thing, you know, the technical area that we are in is suggesting weakness. The seasonal period we are in is suggesting weakness. The data that we are about to get, you know, this week is going to be the driver. And I suppose this is where we need to sort of like be thinking about it, because as I said before, you don't need to wait for the data. And the reason that you shouldn't, you know, I don't think that waiting for the data is wise in every occasion, is that by the time the data is released, this could well be down here, missing an opportunity to kind of get in. But if you play this right, then there's a possibility of getting in with a very tight stop on hardly any risk of the, you know, I wouldn't say let's go in at 1%, but there's no need. Actually, particularly if you're going to be trading this all the way down to here, but there's, you know, there's no need. I think that you could even, I mean, that is last week's high. You could even get above last week's high, you know, in this area, and still be looking
pick up a decent reward.
Yeah, I mean, if it was down there, mate, you're looking at a 10-1. So there's actually sort of I think a decent case to be made here. For looking at this in so many ways, you know, yeah, you could get in here. That's okay, actually. You could get in there, or you could wait. You could wait for this pattern to be broken and then try and play it all the way down again. if you need to wait for the news. But remember that as much as we don't like the words, this is speculation. We are speculating on the movement of price, having known the potential risks that will destroy the trade. And one of those potential risks is inflation kicks up, and the Bank of England suggests that there's rate hikes are going way into the future, and they haven't got a clue when they're going to stop. So they're the risks. But the financial risk actually is way below the reward, way below the potential reward.
Yeah. Yeah, well, as you say, you go in 0.25%.
Yeah, you definitely could.
Can you afford 0.25% of your account on a potential 10-to-1 reward? Of course you can.
Yeah, well, yeah. I mean, you're looking at sort of 2.5 to 1 then, and with stops up there, you're in pretty good shape. I don't know what the swaps would be. Actually, let me just double check what the swaps would be. RBNZ are at 5.5%. Yeah, so even the swaps are going to be good. Even the swaps are going to be positive. So there's money to be made here just on the swaps alone.
Happy days.
Well,
what do you want?
Myself into this,
you want to set up? You want to set up that suits yourself. That's all.
Yeah, I mean, this hourly would need to play ball for me, because it does suggest that if it doesn't, there may well be just a little bit more upside into this area. And if there is, you get the lower high up there. Nice tight stop. Then you got, there's all manner of money to be made, or all manner of percentage, I should say, to be made from this area. So we need to be mindful that could actually come through here first. So just getting in isn't wise, in my opinion. I think it's a silly thing to do. We need a setup, and it hasn't been created yet. Yeah, two other charts we should talk about. Look at yeah, go on.
While you're changing, Lewis mustn't have heard me say before, that pound Kiwi, I've been, monitoring that and trying to trade it for years now. And Lewis is suggesting, is that still my favourite? Look, I haven't traded it for ages, Lewis. Haven't traded it for ages because it just didn't suit my eye. But now it does. I love that channel, and I like all the confluences around it. And if the seasonals go with us and the news actually works, 100%, I'm on board.
Yeah. Look at this, mate. I mean, this is astonishing.
Ooh, this is astonishing.
This is the Nikkei on a weekly chart.
Wow.
I mean, what is going on? It's crazy. It's crazy. We're 2.5 months into a move which has had no retracement whatsoever. It's just, I don't know how we missed it. Well, I do.
Well, I do.
Look at it, but...
I don't look at it, Oh, there's a beautiful it's two beautiful slingshot trades there.
Yeah. On this weekly, yeah.
Man.
Well, we got 13s. It's a 5 to 1 right now. But on a weekly chart, a 5 to 1 over the course of 2 months. It's just astonishing, really, what's happened here. Will there be a retracement on this? I mean, you'd be saying, yeah, it's going to retrace. Yeah, retrace here. It's definitely going to retrace. Definitely going to. Hold on a second. But this is starting to look like a blow off top. The only thing that I've got to go on here is like using trend lines like this from the lows, because it's getting harder and harder to pick. So it's possible that that's the error. I can't see further back, but it might not be. We might be getting close to the end here, but there's the potential for a blow off top here. But the Nikkei has gone mental, and the reason that I think it's gone so mad is because the yen has continued to go in the opposite direction, and mainly this is a dollar yen, mainly because they just refuse to raise interest rates. Look at the Aussie yen on a daily time frame. There it is on a weekly. Yeah,
everything last week took off.
Yeah.
Again.
Now that's
again.
Again. Yeah. The other thing to look at is for more salutations to Phil, who pointed the 16th as the next potentially significant day. Look at this. This is the 16th on the FTSE. Comes and touches this horizontal level here.
Wow. Look at that.
And it gives you that bar.
Nice.
Yeah. So now what we've got is a little retracement, and you know, again, do you want to get involved in this on Juneteenth? Depends on the setup, of course, but you know, it might be that we're waiting until tomorrow, but before we really get involved in this. But you know, that one's looking like it might be sending us a message. The Nasdaq may well be sending us a message when we're looking at this on the daily. 16th, that's the 16th. Last Friday's bar, that's the 16th on the FTSE. You look at the 16th on the DAX at extraordinarily high levels up here. And it looks like there's the level there on the DAX. It's just come below. There's the DAX. You look on the Nikkei as well. Difficult actually with the Nikkei. It's just been on a tear, but you certainly, you know, when you go back to kind of the Hang Seng, same sort of thing. So lots of these global equity markets have you know, potentially kind of provided us with some information which suggests that there could be some further downside, again pushing us towards the Swissy. You know,
this was Phil's time by degrees, was it?
Yes. Yes.
He's good. He's a good man.
Yeah, he picked it again, mate. He's picked it again. He's picked an absolute killer, this one, you know. I mean, regardless of whether it works out, that is a very, very informative bar, because people will be looking at that. You know, it's not the price. The top of the price action is nowhere near anything else. It's hit this horizontal level and it's created a reversal bar. You know, there's going to be a lot of traders interested in this this particular bar.
Yes, one would think so. Is that it for the charts, mate?
That's it for the charts. Yes. So, but yeah, pound Kiwi short and pound Swissy short is the pick of the week.
So, is there another? I mean, obviously the pound is your favourite. Was there anything else out of the seasonals or COP that stood out, or just the pound?
Yeah, well, there are things that stand out, mate. But when I did some real mining in yesterday, as I say, when I saw that move on the pound during this particular period, and I saw 44% downside. That's astonishing. But then I looked at the day, the date that happened, and it was mainly made up by the Brexit move. I did some extra research and just sort of, you know, got a greater handle on really what happens at this time of year, and the pound really did come out as the one. Most other things were a little bit questionable, but
yeah,
the pound
I'm finding
was the one.
that. Really had a struggle this morning when I was looking for something, and it was just so difficult to find. I couldn't find anything apart from gold. Talk to me about gold while we're here.
Well, I think the thing with gold is that I agree with you on the downside, but the thing with gold is that the narrative has become a little bit more difficult. You know, what was the reason that people bought gold up until this point? It was, of course, to do with the inflation aspect.
Mm-hmm.
That is starting to weaken in the United States, and we still see the 10-year relatively high as well. So not much supports it. The only thing that I could find that would potentially support gold is some extra, you know, some more fear in global contraction. But I don't think that plays into the story for gold at this particular juncture. So I'd be looking for downside with gold. I don't particularly like it against the dollar is the problem. So there might be some other cross to trade it against.
Aussie's a bit strong, right?
Yeah, the Aussie is. I suppose it depends if the Aussie gets dragged into the recession Kiwi kind of story, you know, and what happens in China
and the Chinese story. Yeah, exactly.
Yeah, and that was when I kind of unpicked everything. The pound seemed to flash pretty bright red. Everything else was kind of like, well, there's a maybe there. There's a few things that could happen here. I don't love the timing for gold. I do think there's some downside, but I don't love the timing. I think that there's more questions right now than answers, because we've had weak economic data from the United States. We've had a pause, but we've had a hawkish statement. And I think that it's just created this slight confusion. I don't think people really know what to do right now. And that does suggest to me that there is likely to be at least a pause of some of these crazy moves we've seen. But yeah, I'd be looking at short on the technical picture, mate.
All right, cool. Yeah, look, yeah, so am I, longer term, but Short term, I think there's a little case for a rally just in the next few days. We'll see.
Yeah.
You were talking about Phil selecting the 16th. Well, he doesn't select it. He just reads it. And the 16th paid off very, very well. He's got something to add, I believe, on the footsie. G'day, buddy. How you doing?
G'day, mate. How you going?
Top of the world, mate.
Sorry for the faux pas with the mic on just then.
That's okay. We thought it was a tiger coming in, but talking.
I felt like that in my throat too, I can tell you.
Can you go a little bit closer to your microphone, mate?
How's that?
Yeah, I can hear you. It's just a little bit weak.
Don't know what I can do about that, to be honest with you.
You're all right. We can hear you. It's all good.
Yeah, we can hear. Yeah.
Yeah, I just had maybe a comment, if you want, with the footsie.
Sure thing.
Bigger picture stuff, I suppose. Maybe throw a bit of a spanner in the works. I can see this is not something I've bet on. I don't know the footsie well enough. But on the bigger picture, for the footsie, the indicators tell me there's the 16th, obviously. Oh, here's a funny one before we start. I always laugh. I often make people laugh when I'm trying to...
Joe Biden falling off a bike.
Yeah, that's it. And they start, and it reminds me, this rash always reminds me of this comment. So, you know, where he's got to know about the COT data and the whatever it is, the June's holiday, Juneteenth holiday, and
Juneteenth, yeah.
whether there's a party in Parliament, all these thousands of things he considers to make a decision. And I know exactly what the answer to that decision is for the 16th, without knowing any of those things, okay? And you said it earlier, it makes me laugh. It's already written on the chart. That's the answer. You can make a decision before the news comes out, after the news comes out, halfway down the trend, halfway up the trend, whatever you want to consider, that's the answer there. So it's just how silly, not silly, it's how many things there is. It always stands out in my mind, the way you guys look at it, like how many things you have to consider, and it all comes down to one number, isn't it? Like it's amazing what we're trying to achieve here, really.
Do you think, dependent on, and I know you trade on daily charts, right? So do you think that your view of the world in trading terms is somewhat different to somebody who's trying to trade? Well, I'll let you answer the question. To somebody who's trading on 5-minute, 15, 30-minute hourly charts.
Oh, yeah,
so that data and all of those considerations are pertinent to that person, right? But not necessarily to somebody who's trading end of day or even weekly or monthly charts.
Well, to me,
position trading.
To me, it's no different, because the way for them it might be, but for me, I make exactly the same calculations to trade. You know, whatever you want to call a 5-minute chart, half an hour chart, 30-minute chart. Make the same decisions if I'm trading a daily or a weekly chart. Doesn't make any difference to me. It's exactly the same. And just like, as I said to you earlier, Jeff, get into, just for the fun of it a bit, again, was picking the day, the time of the day when the market changes. And actually, Ash should probably be able to tell us, this would be interesting, because of the style of bar we got there. It's somewhere there reversed during this part of the day.
Oh, we haven't got your chart, mate.
Oh, sorry, mate. Let's try and do that. Oh, that's why you didn't get me. I didn't get the comment about the. Yeah, I had an arrow on the chart with the price there for the say that all that data adds up to that figure, which is the closing price. You probably didn't get the relevance of that, I guess. I had that 70, whatever it is, 70. Close 76.42.72 is that point there. All the data adds up to that point there. Well, no matter how much you analyse it, that's what it adds up to. So this was obviously a reversal day. If you took, if you work out the time difference hash between Sydney time and is this traded on the LME or the AIM?
LSE.
If you work out where the LFE is geographically and work out where the sun is, so you just do a time conversion from Sydney to wherever the LFE is. That's in London, I take it.
Yeah.
Yep. So we'll London time, do the conversion, and you see if that, and look at your data all day, and you tell me that chart didn't turn around at about 12.25.
425.
12.25.
12.25.
I think it's 12.25 roughly.
12.25 Sydney, right?
Yes, 12.25 Sydney. That's correct.
What time is it in Sydney now?
You'll have to set your alarm, Ash. That's really early, man. 12:20. It is now 6 p.m. So 5 hours and 35 minutes after.
5 hours after, which means.
So if you go back 5 hours and 35 minutes.
Yeah, so it's gonna be 4 a.m.
Yep. What happened at 4 a.m.?
Well, interestingly,
it's got to be on that particular day. Well, the time difference will be the same. So
is that the 16th, mate?
Yeah, this is the 16th.
Yep. So it'll be the next day you're trading, isn't it?
Yep. Oh,
so
hold on.
It'll be on the 17th, won't it? I guess, or whatever. How does that work out? You be on
17th at 0400. It'll actually be the 15th at no, it'll be the 16th at 0400. Well,
oh, sorry, guys. Got one second. I've got somebody ringing me. 1 second.
Yeah, you're right. Okay, so let's work this out, Phil. 12:25 p.m.
I've got a clock here. I was just going to try and look it up. I've got it on my computer, on my laptop somewhere.
Okay, so 12:25 p.m. As I said, was 4 hours and 35 minutes ago, our time, Sydney time. So that's still got to be 4 a.m. Ash's time.
The world clock's disappeared. Oh, yeah, okay, yep. Oh, I know why I've done the wrong thing. Just give me a second.
So this will be interesting if he looks this up and it did. We'll all go, ooh.
This is what I use.
A world clock. Yeah, it's handy to have a few times up on your spare screen. That's true.
So it's 6 p.m. and it's 9 a.m. over there, so it's more than 4 hours.
Sorry, guys, I'll be with you in a second. I've got this workman coming round. 1 second.
You're right, mate. So you're saying 12:25 p.m.
So it's
Sydney time.
Monday at 6 p.m. and over there it's 9 a.m. Yeah.
Yeah, that's right.
So we'd have to work out. Actually, you can do that on here somewhere too, but I can't remember how to do it at the moment. Anyway,
I'll tell you, the easy way is.
So we want 12, say 12 o'clock here, near enough, isn't it?
12 p.m. or 12 noon, right? In Sydney.
12 noon, yeah.
Which was 6 hours ago.
Just going to go and let him in. 1 second.
All right. Which was 6 hours ago. So 6 hours ago for Ash was 3 a.m. because it's 9 a.m. there now.
Okay, so it's the following day when he can trade it, isn't it?
No, same day. 0300.
Oh, yes. Yeah, it is too. Yeah, you're correct. You're correct.
Yep.
So it's 3 a.m. So if you've got to add, what do you got to do? You've got to add the difference, don't you?
9 hours. We're currently 9 hours apart.
So 3 a.m. So when he'll start trading at what time our time?
Sorry, 3 a.m. our time.
No, what time our time would he? Well, it doesn't matter what time out. Yes, hang on. No, it won't matter what time our time will. It's just whatever time he starts.
That's right. Whatever time's in front of him, and you're saying that the market moves at that time every day. Every day.
No, Not necessarily. Depends which time by degrees we're using.
Right, it's got to be time by degrees. So, yep, okay.
Yeah, so it's got to be, well, it can be any day, but that particular one I worked out, you see, which was for the 16th. So at 12,
Okay.
it was on 12:20, about 12 o'clock midday, our time. Then whenever they're trading at that particular time, that's 3 o'clock in the morning. So this is where time by degrees will be interesting, won't it? So yeah, I'd have to do a different calculation on it, I reckon.
Well, the market's not even open, is it? That's a problem.
That's right. That's why it's a different influence. Yeah, that's exactly right.
Yeah. So yeah, I'm not sure how that's going to work.
Well, it would probably be the next day. Hang on, let me think. I'm thinking of that in reverse. What I would do if that was time by degrees, I'd start the next day on the open. Would be the date you would use on the time by degrees.
Okay. Well, when he comes back, we'll see if that works.
So at 3 o'clock. 3 o'clock on the Monday. So it would be what times? What do they open at 10 in the morning?
8.
8 in the morning, do they?
Yep.
Okay. So it might have. Oh no, well, it couldn't have done. It must have ran up. Well, maybe we could do it in reverse and find out what time of the day it did reverse, and then work it out. Then we can get a formula to work it out. You see, for the future.
Go backwards. Right. Okay.
That's how. Yeah. That's how
We've decided you don't have to get up early, mate, because your market's not open, right?
What time are we coming up with then?
Well, it's the discrepancy, obviously, and it ends up at 3 o'clock in the morning. If that was time by degrees, I was calculating it here, I would just use the open at the next morning, but that won't work because obviously the FTSE ran up for part of the day, and then it ran back down again. So at some time during the day, it must have reversed, and you could probably work it out in reverse. So if you look up what time it did reverse, and then we can do the calculations on that in relation to the Australian time.
Well, I can tell you
if that's consistent.
The interesting thing about 3 o'clock is that 3 o'clock AM UK is not the time, but 3 o'clock PM is very significant because the US market is just opened by half an hour.
Ah, okay. Well, that's probably the tie-up then. Because I haven't worked it out, mate. I couldn't tell you, but I'm sure you'd work it out because they'd be an equivalent to. Because the sun will be over the LME at whatever time the following day. You see, that's what we're looking for. Yep, midday preferably, because the middle of your trading day. Let's put it that way, not midday necessarily. So midday for us is roughly the middle of we're 2 hours into our trading by that time.
Mm-hmm.
So whatever your significant middle of the day is over there, and that's when it'll work out to be. So.
Yeah, I mean the middle of the day is going to be 12:15, but
what time does your trading day start?
8 a.m.
Oh, that's literally middle of the day then, isn't it? Yeah. And hang on, you got a 6-hour day though, or an 8-hour day?
8.5.
Oh, so we've only got 6 here.
Yeah.
So that time, you have to work out when that time was, where the sun was, yeah. So the spanner I was going to throw in the works, apart from that little comment, was that, and we looked at this reversing, obviously, but this is a really reliable indicator for a reversal and the relative strength. It's not super strong, but see how we get a divergence between the market action. Well, it's a big divergence relative to one another as opposed to a direct divergence. So that was the signal that was going to go up from there, you see. And then if you remember back, I think we pointed out that the 5th was an important date, and that worked straight out of the bottom of there. I didn't tell you this at the time, but that worked straight out of the bottom of there. So that helps me confirm that that's the date we're looking for, because this is our trigger. And then from there, we calculate, which we can go back to the time by degrees date and find these dates here, you see, this date here, which we found that's the 16th, obviously. And and because that would be still under influence of this, I would imagine, because it's pretty close. Then we look at our MACD, and our MACD is a classic, what I call a continuation pattern. You see, it's a long way below the 0 line still, and the line and the graph are still a long way apart, a fair way apart. That's a good sign, a strong sign actually. And although the FTSE does regularly make that differential, so it's not mega strong, but for us it would be strong. And then here it's about to cross over. That's an indication that the next move is going to be up, not down, Ash, which is opposite to what you said. So if I was trading that, I'd be very, very careful. And if we look at it on the weekly has just taken a turn. So the MACD is in the process of turning. It's still got a fair gap here to make up yet, so it probably could be next week or so, maybe. But if it takes this move on the daily, it'll fix it, you see. It's got to reverse here a fair bit, but of course the weekly won't change until the daily does for a week. So you can see our early indicator, which I love, is the relative strength, and that's already made the move. That warns you that that's what's going to happen next week.
I mean, that's interesting because that plays into the pound narrative. You know, the FTSE tends to strengthen if the pound weakens.
Yeah, so if I was taking this trade on a subject that I was knowledgeable about, I would be taking this as a long, not a short, even though it reversed on the weekly. I think that's a temporary thing. The daily, I should say. I think the daily reversal is a temporary thing. I think
slingshot candle pattern to go long on the FTSE at 76.89. Interesting.
There's one there, is there?
There's a setup, yeah.
Well, that's what I'd be taking.
I'll show it to you in a tick.
Even though the day reversed, that's what I'd be thinking, Ash, anyway.
Yeah, cool. Okay, amazing.
So after that, of course, the next thing, sorry?
No, you go, Phil.
Yeah, so the next thing was the 22nd, and that's not a huge date either. But if this is you've still got a lot of faith in the downtrend, obviously, across here. But if this runs up nicely into the 22nd, and it does go up, the 22nd will pull it up, you see.
Yeah.
I've checked that out numerous ways, and that's what's going to happen.
Yeah. Right.
It's not going to be a mega major, but it'll just be a turn there, and that'll run us up nicely up here somewhere, and then it'll come back down and keep following this downtrend.
Brilliant.
That's what I reckon I'd be looking at.
Yeah, brilliant, mate. That's really good for us to kind of have a look for.
Now sorry.
Well, I was going to say that, I mean, the FTSE from a personal perspective isn't a very attractive proposition right now. So actually, to see it move up, it might actually become a bit more attractive. So it would be yeah.
And the other thing is about working out where it's going to go, and that's why I generated these points for you the other day. So this is how I picked the points where it's going to go to, and that tells you where it was going to stop. 160, 100. If it gets through 61.8, 100% is obviously always strong. But for any of these points, actually, when they're this far apart, they're all strong points. It would have hesitated here, and then that's pulled it up right on the nail, really. So that's how you pick the time, and that's how you pick the price, because the price is secondary to me. This is a secondary thing as opposed to the time. Yeah, that's all. I just a bit extra to throw in.
Many ways to look at markets, aren't there? No question.
Yeah.
All right, we're nearly out of here. Thanks for that, mate.
Yeah, thanks, Phil.
You're welcome. I'll give the screen back to you.
All right, I'm going to, just before we go, add my little setup to that, if you like. Not that I'm suggesting it's tradable, because I haven't done any research on it, but it's interesting to hear that viewpoint. So this is my FTSE on the weekly chart, and that level there, which is probably around 76.5, something like that, is pretty critical. And it looks to me like a short is on the books. But if, and it's almost tradable for me, it's almost stop loss here, entry here. But the trend line's a little bit too close to make that tradable in terms of reward to risk. Then if I have a look at the daily is telling me exactly the same thing, that this line or this level is absolutely crucial to what happens next, 76.5, let's say. And my contention would be that if price came back to here, it's likely to go to 78. The thing that I see as a setup is a classic slingshot setup where we've got beautiful separation away from the trade line, and we've got a shot over the bow here with an approach and pullback. We've got another shot over the bow here with approach and pullback, and now we've got another shot over the bow with approach and pullback. So this will be a breakout, 100% breakout. And I'd put my entry there and my stop loss. Great question. Where do you put your stop loss? You trade the bar, you trade the swing, you trade the pivots. There's all sorts of things going on there. But that is a setup to trade long. Not saying it's going long. I'm saying if it goes to here, it'll probably go to here. That's the only thing I'm saying. Quickly before I go, is there a trade on the euro to be had today? What a mess. With no real action in the first hour and 15 minutes of London and no US session, I would be thinking, not for me. So I've got absolutely no intention of trading the short-term timeframes at this point. I'll stick with the dollar, with the gold against the dollar. And this is very, very similar setup to the FTSE, right? You can see pull back away from the trade line, pull back away, pull back away, pull back away. Exactly the same as I've just described on the FTSE. And my contention again would be if price goes to here, it's likely to go to here. I'm not saying anything more than that. And that's where you need to make a decision on whether you want to bank some money there or try and bank in section 2 of the trade. I don't think there's a real great reward to be had on section 2 of this trade because I'm bearish in the medium to long term anyway. So if I could just take that little chunk out of the market, I think that would be exactly where I want to go. Everything else, really, as I said from the outset, I've got no bloody idea at this point, and it's too early in the week for me to say I'm biased in any other way than I've just described. Pretty simple. Love the pound Kiwi idea, Ash, and I think that's probably, you've given me focus for the week. Thank you.
Yeah, no problem, mate. Yeah, well, that's the same for me. I've only got focus for the week on that and the pound Swissy. I haven't got any trades either. I think it's that kind of mid-month kind of thing that always happens. Mid-month is not the best time to be getting into too many positions. You're going to get a few opportunities, but not many, which suggests that next week will be, as we run into the end of the month, is much more likely to cause some genuine movement as positions are kind of evened out and closed up a bit.
Happy days. All right, let's get out of here. It's it's not 1 o'clock. I've got another meeting coming up in the not too distant future, so maybe half. We'll see how we go.
Yeah, you got a meeting with Lee from Ilf.
Weird, kind of.
Bit of blue.
All right. Oh, gee, that takes me back. Do they still make that stuff?
I don't know.
I don't know either. Well, anyway, have a great week. It's good to be back. Gee whiz, I absolutely missed it, but I've got to get up to speed now. I've really no idea what's going on. So let's spend a bit of time in front of the charts. Thanks for being our trading buddies, Guy. Thanks, Phil, for your inputs, and we'll look forward to catching up with you guys on Thursday. Have a great week ahead. Bye-bye for now. See ya.